Shall we give another minute and 5:05. If you can start 5:05, it will be wonderful. All right. Welcome, everyone. Thank you again being part of our RM Smart Investing class. I hope all of you had a great week. We've had a prosperous and successful one so far. It's definitely not dull moments in the markets. So today, what I thought about, we've been working on options in last couple of weeks, and building on that, I thought maybe we can divert a little bit and work on a strategy. And it's more than a strategy, maybe a tool that would help us to not only understand the options activities, but also as a stock investor, maybe find some opportunities. So before I do that, let me, again, the reason we are here today, I thought this was really interesting about taking calculated risks. If you win, you will be happy. If you lose, you will be wiser. And again, we want to work together to have that edge, right? So we don't want to take risks with no nets, with no understandings. It's almost like being a pilot. A pilot is carrying this unbelievable amount of metal in the air, but every tool is tested. They make sure everything is working properly. And that's what I want you to do. Approach trading and investing as you are the pilot. You want to check everything, all the tools to make sure everything is working properly. You're still watching, but you have to fly. Otherwise, the pilot can just come sit there and say, ladies and gentlemen, thank you for being with us, and just drive around on the carpet. And that's it. Oh, we're not going to fly because we are not 100% sure we can make it. So it is a joy of actually trading. You want to be in the markets. It is fun as long as you have the right tools, as long as you have the right mentality. And again, you know your risks and you know what to look for as far as your objectives. So with that in mind, I thought tonight we will talk about the unusual option activity. I'm sure you've heard a lot about these, probably sometimes if you watch CNBC, if you watch Bloomberg, sometimes these option traders, John Najarian, they come and talk about options activity. But is it useful? I mean, why should we pay attention for unusual options activity? So I believe it is useful, and I think hopefully by end of our session, hopefully we will feel more comfortable to use it as another tool in order to find opportunities. So one of the reasons I like the unusual option activity is not only for finding candidates for options, but also for stocks. One of the biggest problems that I hear as investors and then the traders is how do we find candidates? We learn about screening, but then we are not sure there's thousands of stocks out there. So we want to really minimize the opportunities. In the past, for instance, we didn't talk about spreads, we talked about selling puts. We looked at screening, for instance, we talked about channeling, let's say channeling up or just a channeling and a range bound stock maybe to find out if there's opportunities for trading options. This is kind of opposite. By looking at the unusual options activity, perhaps we come across some stocks that there is some kind of unusual thing going on that maybe would be a good candidate for buying and maybe sometimes shorting it, and or if you own it, maybe getting out of it. So these are the reasons. I think that's one of the main reasons it's good to be familiar with these unusual options activity. The other thing about these options, it's very important, and that's another reason I like to be involved with options, is there is no dark pools. It's more transparent than stocks. With stocks, with a lot of, again, with dark pools, what it is, or the traders or institutions, they come together, they do the trades in places that you don't have access. It's not visible for the markets to see, for public to see. So you don't have that, so sometimes you see these moves happen in stocks and you're watching the volume and you see, well, I didn't see that. What is happening? I'm looking at level 2, level 3. So that's the reason. There's a lot of things happen with the big blocks. Maybe there are private trading going on, private exchanges. With options, you don't have that. It's immediately, it's at least most of the time, it's visible. So you have access to that information immediately. So that's another advantage of understanding what is happening with the volume, with the options activity. Also, in the past, we've had these exchanges, the floor traders, using the hands and the noise. So that's one of the reasons, especially when I was doing futures, I was subscribing to a service, and all I did, I just listened to the amount of noise. So when there was a big noise, and let's say there was a big economic news, let's say 7 o'clock, and you see there's activities, and then you would see the noise getting really louder and louder, and then the market is going up, then you knew there's a momentum. Now we don't have these, open cries. There's not floor traders. The beauty of it is now you as a retail investor, or all of us are, we have more access to information, and because of that, it has made the trading floor for us more fairer. So you have access to a lot of information. So that's, again, another positive thing. The other good thing is once you understand the volume and these option activities, then you can actually kind of forecast, hopefully after doing other researches, to see what is the odds. And it definitely becomes helpful to understand, again, what is going on. Majority of time I look at call side of things because they work in any type of environment. With the put side, when there's unusual option activity, I'm more cautious. If there is a bearish momentum with the markets, then it makes a little more sense. So usually I favor with the activities more on the call side. So you will see, I will go over the screening on it, so you will be more familiar. But I'm just saying, it looks like calls work better than puts with the unusual options activity. And usually you will see that before the expiration, a lot of big moves happen, and that also gives you another hint. So again, that makes it a little more probability on your side to analyze your stocks and your candidates and maybe even options activity by understanding the unusual volumes. Now that you know the value of it, where do we go? You can do things on your own. Last week we talked about a couple of ideas. So how can I find these? So I want to share the ones that I use, and then there's also the paid sites. As you know, I try not to pay to any type of subscription basis, because it just becomes too many things. And if I have 20 different kinds, I'd rather just focus on things that I know how, and then have access to the free ones that they give you enough, I think, enough information, as you will see when I share it with you, that you can do it on your own. So there are some good things when there are the paid sites, but I think between the foundations that you're building and the platforms that you have, I think you have enough information to do it on your own. If you didn't, I'll start with a paid site. There's a Flow Algo, Black Box Stocks, Benzinga Pro, and iVolatility. They allow you to look into screening and finding unusual activities. But the free ones, some of you have the TD Ameritrade with the Thinkorswim. You can use that as a screening tool, and I will use an example for you. Barchart.com is a great one. They have a paid subscription, but the free one is very good to start with, and we will use an example of what we did with Barchart. Marketbeat.com, it gives you the news, the reason for it, and then Option Sonar is more of a visual. So hopefully these will help you. Look at those, see which ones you feel comfortable, put as part of your research, maybe in the evening, spend like maybe 15 minutes, and just kind of, by the end, hopefully will become more familiar and more comfortable that you can have your own research. One thing about trading, and little bit of more trading than investing, you will find out you really have to be a scientist and artist and then psychologist, especially when you do trading. And then at the end of the day, when you get to my age, you become philosopher because now you have to justify all the things that you did, the mistakes that you made. So the psychology is there to beat yourself up or reward yourself, but then the philosophy comes and says, "Oh, calm down." And so anyway, you will see you are really a combination of the different things. So with this, again, you're becoming more a scientist in the sense that you do a lot of research. Then the art becomes of the timing, when how to read the charts, how you want to look at the again the patterns and how you as far as analyzing those and when is a good time to get in, and then that's when the psychology kicks in. So basically anything that you do though, you have to really put the time if you want to be successful. So this is again, it's a good starting point going to these three sites, and it will help you to become more successful. Now, how do you analyze the option activity? So what do you look for when these information come? What are some of your favorite things that you have to follow up? Again, I'm going to use some examples, so hopefully that will help you to understand it a little better. So the main reason for this unusual option activity is about the volume. So you want to learn about unusual volume coming in. And then you want to compare that to the open interest. Again, that gives you an edge. An open interest, in a nutshell, what it is just the inventory sitting there. So some of that inventory is being sold during the day, some of them are being added up. That's where the scientist comes in, and you want to interpret it to whether there was more buyers, sellers, and that's where you compare the volume with the interest, which I will explain again. Then you want to know the time and sale. You want to know if there was some unusual big volume came in, you want to find out the time, and that's how you find out if there was a buy, a sell. And this is the problem that a lot of traders have, especially option traders. That they say, okay, Ramin, I got a great, okay, there's a this great tool. I know there's a huge volume, but what is it? I don't know if the big institutions is hedging, or maybe somebody's doing selling something, selling an option against their position. So we will learn how to interpret that. But also you want to look at the daily chart of that options, look at the resistance, the support, you look at the moving average, you look at what is happening with the earnings, what are the dates, you look at the, again, the volume. And then at the end, I will teach you what is the bottom line when you're using the time and sale by using the 1 minute chart to understand whether there was a buyer or seller. Okay? So let me jump into my 7 rules that how I use the unusual option activity, and hopefully they're helpful for you. If they are, then you can go ahead and use it and also kind of modify it your way. But yeah, I thought this would be a good starting point. How I look at the unusual option activities, and what I look at is first thing, let's say we did the screening, we looked at our platform and we found out, well, there was this stock with unusual options activity. I want to see a high relative volume. Now, usually you say about 5 times. I like to see 10 times. And what I mean by that, if this options XYZ company usually does a certain exercise price, the usual strike price, so you would do like 100, I like to see 1,000, and that gives me the reason there's something going on. But also, more importantly, I want to see a big volume compared to open interest. You will see in our example how that works. So that is very important because I see there's a little inventory sitting there, and all of a sudden the big thing is coming, big part of volume is going to be add up to this. So I want to investigate where is that volume coming from, and if there was not much interest, why all of a sudden there's a big interest. And this open interest, you have to remember, the volume is during the day. So every time you look at your option pane, you look at the volume, they're constantly coming and going, whatever the activity is. The open interest is only at the end of the day. So if you're looking at during the day, what is the open interest is the previous day's inventory or the closing. So we don't know how this open interest is going to be affected. All we know is I only had few hundred here, and then I have like 10,000 coming. That really ignites my interest. So we will talk about that, how that works. Also, I like to look at more out of money options. And the reason for being is there's a lot of activities, especially when the options expiration date is getting closer, you will see a lot more at the money. But when I see something really out of money, it tells me there is something big might be happening or somebody knows something. So the more out of money, the more uh, important to me to find out what is going on. So I usually like to know it's out of money. I also like to have expanding volatility. So if this out of money option, there was a big volume, and then I see the implied volatility is even going higher, that's something tells me there's somebody knows something. Another important thing is, granted, all right, we see these activities, but what is the catalyst? So you have to come up and do again that investigation on your own. And I will, the next two slides, I'll tell you what catalyst that I look for to find out what is happening. If something is expected, then the market knows something, everybody else knows. So that's fine. If there isn't, then I want to investigate what is happening and is this a good candidate. Now, I personally don't like to look at like the let's say these FANG stocks, right? So there's a lot of volumes of large open interest. What ignites my interest is it's the small caps, some unknown companies sometimes, the mid-size. I would really like the mid-size companies that they do have liquidity, there is that volatility, but they're not followed with many analysts. There are not a lot of activities, and all of a sudden, if something comes in, it piques my interest. So I want to know what happened. Another thing is important for you to understand, and that's when I approach things, is I have to understand what is the bid, the ask, the midpoint. Remember, most of the time, we want to, when we get in, we put our limit order, but if the stock is very liquid, I don't, for 1 penny or 2 pennies, especially if I do indexes, I just go at market. But sometimes there's a midpoint. This will tell me by understanding the bid, the ask, the midpoint, it will let me know whether the buying was actually real buying, and if it's above the midpoint to the ask side, if there was a favoring toward the ask, then you know this was real active buying. If it's more toward the bid, then somebody's selling those options because they're trying to get as little as, as much as possible, but they want to, the market is trying to give them as little as possible. So if the midpoint to bid, then that's more of a selling. If I see something, we'll talk about if there's, again, these activities could happen into different strike prices. All I was saying, you see there's a 5,000 here, 5,000 there. That could be a vertical, and that's what it is. Watch for vertical spreads, because I want to know if somebody knows something, but they're doing this vertical, then I want to know, are they being bullish? Are they buying, let's say, in this case, a bullish call credits, call spreads, or are they bearish? Are they selling the call spreads? So again, by understanding the bid, ask, and midpoint, I will know which way they are trading. Also, the other thing that helped me out is this a hedging activity? Because a lot of institutions that they manage a lot of funds, now, if they have a large holdings, they're the ones who come and buy for their protection. So let's say if they're short something, they want to buy the calls. If they are they hold a big chunk in a stock, maybe they're buying a big activity in the puts. So that by itself doesn't mean if there's a high volume going on, that doesn't mean, oh boy, there's something going on, I gotta jump on it. We want to make sure it is not a hedging activity from the institutional side. And that's another reason I like the mid cap, because there's a little more flexibility and a little easier for me to do some research on them to know that it's not a lot of influence from just the institutions. After I've done all these and I looked at the bid and ask, then I like to check the 1 minute chart. And why is that? So it's important for you to understand how the market makers work. So it is because we've talked about selling options. We talked about selling put a couple of weeks ago. Remember, for every buyer, there's a seller. So there's another side. So if you are selling the option, you're hoping it's not going to get there. There's a buyer which is hoping it will go beyond that. So what happens if there is a market maker, and remember, there's an open interest is small, and that's what we talked about, that we want to look for something with a big volume coming in. So here I'm a market maker. I have 100, 200 in the inventory. I'm okay. And then there's this big rush of 10,000 volume comes on the call side. So what that means, there's somebody wants to buy the call, hoping that stock is going to go up. I am on the other side. So basically, I am selling it. What the selling means is if the caller buyer wants to exercise in the future and if it's in the money, I have to deliver those 10,000, in this case, it's like a million shares, right? For every one contract is 100 shares. So here I am, somebody walks in with 10,000, says, I am betting that this stock is going to go up. Here it is, we buy the calls. I am on the other side, I'm the market maker, and let's say I sell the calls to them or whoever I am. So I am out of 10,000. On the other hand, I want to make sure I will be able to deliver that. So how am I going to do that? That's when I have to build my inventory. The moment that somebody comes and buys the calls, I, as a market maker, I go to the market and start purchasing the stock or the shares to protect myself. So just in case, if the markets go up and I have to deliver it in the future, I have my inventory in today's dollars. So that's the important thing. So how do I find out that this was real, there was a real call buyers and I'm doing the inventory? I look at the moment, and I will show you how the time and sale is important to see. Let's say at 10:01, somebody came in within 10,000 contracts. I go look at that 1 minute graph and I see, there was a big jump at that 1 minute because again, the market maker was filling its inventory. So what that tells me, that tells us this is real. This person is actually buying the calls. If I see there's no activity or little activity, then I know this was either a hedging or it was almost like maybe somebody was selling, someone was doing the vertical. So these are the little things that you have to watch for. And there are tools, and I will share that how you can, master these. The last one is again, a little bonus beyond the 7. After all these things done, I have mentioned it before, I look at the insider activities also. Now, with insider activities, it's sometimes, there is sometimes a manipulation, but also who's doing what. But if I see there is a positive effects, there's an inside activity going on top of these call volumes, something is happening, then I know this is real. So basically, that gives me the comfort knowing that there's something important going to be happening, right? So we talked about catalysts. So what are some of the predictable catalysts? So if, let's say, you see something is happening and you see this big volume a week from now or 10 days from now, and then you go and look at the earning date, then that makes sense. If somebody's predicting maybe it's a good earning coming or whatever. So so you want to make sure you check the dates for the upcoming earnings. So that could be one analyst. Maybe somebody's really thinking it's going to be a very good earning, or on the other hand, somebody maybe was shorting them and wants to make sure they're protected. So these are things you have to be watchful. The other thing is I look at if there's any type of a phase 2, phase 3 in the medical biotechnology, the FDA activity. So you can watch that. So you have to do a little fundamental research, find out, and this usually happens again with mid-sized, small companies. So you want to see if there's anything going on. Maybe there's going to be a big positive. If you look at some of these like big movers, you see there's a lot of biotech companies based on, either findings or approvals or at least passing the phase 2, going to phase 3. So basically, that's also, it's important to watch for to see who is doing these activities as far as options buying, and are they expecting a big positive things. And you will also see the volatility expands based on the news coming up. So as far as a date of that, FDA time. Upcoming new products. I mean, Apple is a good example. We are waiting for the next product. We're looking for, other companies with the new ideas coming up. So you want to watch for those dates as well. And then dividends also, the dividends, we talk about ex-dividends. So they also play a role because a lot of people who maybe wanted to capture, or they want to make sure that they want to have it after dividends paid, before the dividends payment. So these are the dates that you want to have. Again, this is your research analyst part. So again, it takes time, but also, especially if you're an investor, it's definitely, it's productive time because you're in control. You're not just listening to Jim Cramer on TV or the pundits on TV telling you what to do. This is your decision. And once you make your decision, because you're very clear why you did it, you will also very clear why you will stay and when you get out, because you are managing your own positions, and you are not at the mercy of, again, the news events. This is again, you can have control. Now, let's talk about unpredicted catalysts. What happens? Now, you don't know, but all of a sudden an analyst comes and upgrades or downgrades, and then you will see some activities happening, some unexpected announcement by a CEO regarding positive or negative things, maybe departure. There's a large activity by activist investors who come in. They have their own intention. There could be accounting announcements. Most of the time, usually it's the negative things. We need the restatements. They were blowing, they were exaggerating the numbers. They need to change, or something unpredictable event. We call it black swan. Something beyond the control. Maybe there is a medical malpractice. Something happened. We talk about asbestos, but like in the past we've had, but let's say a medication is causing cancer, for instance. So these are the other things. The biggest one for me, I usually look at, again, in the mid-size and small caps, is when I see a large activity, I look for, sometimes there's a takeover or a merger. And those are usually, again, it's not predictable. That's what I look at. I do dig more to see if there is any horizontal suppliers or vertical suppliers, if there is any synergy going on with the companies, what is happening with the cash, the debt. Somebody has been maybe taking a little more chunk of this company, and the main one will be the insiders. So I like to see that. So this is what will be a good indicator. If you have a company that for a long time it's been just gradually, doing average volume, all of a sudden there's a big volume with a different strike price with different months. Sometimes it's happening because you're not sure exactly when it's going to happen. Then this will be a good indication to, again, to look further. All right. So let's look at some ideas that I spoke about. So one of the companies I mentioned was MarketBeat.com. So basically with the MarketBeat is, it tells you, this is as of today, today's closing, so it's after closing. So it comes up with some of the candidates for you, and it tells you, well, today's call volume option was this. The volume, average option volume is usually this. So there's a big chunk increase. And then they look at again, you want to have some obviously liquid stocks. So I always like to have over 500,000 minimum. Sometimes I like 1,000,000. So you want to have the liquidity because again, you don't want to pay too much for any type of option. And then it also gives you some of the reasons. So for instance, if Zen went up, there was an analyst upgrade. So I like market beat in that sense that it kind of explains what is the reason, that catalyst for this. The next one is bar chart. Again, these are all free, by the way. So you can go and this is again as of today. So I looked at this and I'm looking at, again, I like mostly the call side, but I see there's some put. And then I notice stock price of Marvell, which is a technology company, and Marvell is involved with the 5G. And I noticed the price is at 41.18. But there's a heavy activity going on a $50 strike price. There's 44 days before the expiration, which is October 16th. And notice that the ask price was 63. It ended at 63. This is the interesting part. The volume was 11,050, but the open interest is 111. Now, something is happening. So you can see the volume to open interest is 99.55. So that's, I think it's worth investigating. And then there's more. I mean, you can do this on your own. Again, I like more of a companies like Microsoft is a little, it's such a huge volume. It, it's good to know some of the stories, but I rather concentrate on Snap or iKnow or again, Marvell. So I'm gonna use Marvell as an example today. So, and I see the implied volatility is 52.8, so it is pretty good. It's expanding, and we will see how. So let's do a little more investigation. So this is from Thinkorswim. So I go, because now I understood that this was what was going on with the options, and I noticed the 16th of October, I opened that. There's a lot more. I will show you what I have on TradeStation, but basically because I want to see the volume and open interest, so that's what I chose for Thinkorswim up here. So yes, sir, here it is, 11,050, 111 of open interest. It closed at the high of the day, so that means that the activity was continuous. And then I see there were a lot more activities you can see on the call side, and this is the put side. And you look in the open interest, there's not a lot of open interest when you look at, there's just some here actually on the 35, but when I see there's a lot more activity on the volume coming up. So I want to investigate what is happening with this. Why? Why October 16th? I went back and this is my TradeStation that which I use a lot. So with the TradeStation, I wanted to see a lot more in details. I wanted to see what is the historical volatility is 39. We are at, again, you notice it was at 52, 51. And then I want to see the movement. So basically for October, as you can see, the standard deviation or expected movement at one standard deviation, which is about 68%, in this case is about 587. So 587, let's say $6 plus 41 is $47. So we actually looking at a 1.5 standard deviation. So somebody is thinking of something at this stage. So I looked at the November. There were some activities, but they weren't as much as this October. So what I did, the Thinkorswim, for instance, allows you to go. So when you go to Thinkorswim and you look at the option pane, on the bottom, you see the options time and sales. There's a lot of activity. So the biggest activity happened, the biggest volume was 2,150 on the September 3rd, but it was for a penny. So somebody was basically actually, it seems like maybe they were actually covering themselves. So we don't know, or they had sold, they were buying back. And So you can actually do some investigation. Because of Element Type, there's just so much to cover. So I want to just give you an idea, but this is where you can go and look at what happened at what price, at what time. So this tells you, again, what was the biggest activities for the volume. So again, in interest of um, our time, I just want to show you that you can find time of sale of a lot of things with that. Now I want to see, well, let me look at the chart of Marble. What is happening? Again, beautiful. I mean, this is, but we are hitting the resistance. So, but it was a very nice day today. There was no real news. As you can see, they just had their earnings. So there is no earnings on October 16th. So what is going on? So this is the reason you want to do more investigation. I looked at the insiders transaction. There was one director and the CEO sold a little bit, not much, and a couple of weeks ago. So it is not something that it was impressive to give me any indication of what's going on. So this is a food for thought. You want to look at it, why, just pursue that. But this is how I look at my, analysis of, the whys of buying the stock if there's anything going on. Again, this is the 5G, the communication sector has done so well, the semiconductors. And so this is, as you can see, there's a big momentum on the buy side. The momentum is, this is a trending stock. So it's, again, just an idea. So a food for thought. I mentioned bar chart and again, market beat. So this is something, I think the question came, what we could do on Thinkorswim. Can we find the things on Thinkorswim? Some unusual activities with the stocks going on. So I'll just share this with you. Again, if we were one-on-one, we sat together, I can just go through this. It takes a couple of hours to work together. I just want to take a picture of this so you will have it as on the slide, so at least understand how to get to this. So this is from Thinkorswim. Just go to scan and click on Stock Hacker. With the Stock Hacker, when you come to the setup scan, this is a pull down and you can do tons of different things, scan, let's say the NASDAQ stocks. Go to the second level, you will see it says top 10 sizzling stocks. And the sizzling, it comes, the automatic, the Thinkorswim does the work for you. They look at the unusual call and put activities that they're way above what usual has been percentage-wise. So I just want to show you this. So all you have to do is, that's it. It tells you this because we chose 10, that's the 10. All you have to do, just press scan. And once you do that scan, because we chose the top 10, these are the things, again, after close today. So this gives you some ideas. Most of the stocks I like to be, double digit, 10 or $15. So basically we look for that. And then, so I look at the call size, the put size. I want to see what is the percentage as far as relative call size to, let's say, put size. So I can do more investigation. Let's say this is a REIT, for instance. So that's the idea. That's something, again, you can do on your own. I'm just trying to give you some tools in a short time. One thing I want to teach you again, every time I like to maybe do something with the Thinkorswim, maybe we'll do that, just give you a little more tools, is, again, this is beautiful scanning tool. There's a lot here, but this is every morning or every night. You can go and check this out. Now, if you look at here, there's this little button by the volume index, this little tiny thing. If you push, click on that, then you can choose, customize what you want to be there. So normally call sizzle index and put sizzle index are not there. This is how you can edit it and add it. You can add a lot of different things. All right. I hope that was helpful. And with that in mind, I think we are doing well on time. And I hope this was helpful. Just again, my whole objective is giving you a little foundation, a little, again, edge, so you can follow on your own and find more candidates. You can do things that you have, you're able to maybe build on that. Again, you don't have to buy the options. You can actually look at the stocks themselves. Um, One thing again, the vertical spread, again, that's why you look at, for instance, if I saw something, let's say I saw 5,000 volume, and I go down, let's say, two strikes, as you said, another 5,200 volume, that's the indication of maybe there is a spread. Or if I did on a call and then I see on the put, or maybe they're similar in the same place. These tell me that somebody is doing some kind of spread or maybe doing this straddle. So look for story, look for the pattern. In this Marvel situation, you could see, actually, I couldn't even go further than 50. It wouldn't give me another strike price. That was it. So I couldn't find if was anyone doing something at 55. And before that, you could see there was not any other large volume. So, but watch for those again. Or I looked at November. I looked at actually the weeklies. This October was stood out big time. And if there was one in November, for instance, maybe that was a calendar spread. So these are the things, again, you have to investigate on your own. Again, my whole objective was to give you something that, a tool that you can build on your own, something maybe that you can look for candidates. Again, the biggest um, question that I always being asked is, but where do I get more candidates? I do the technology stocks, granted, but if I want to find more, where do I go? A lot of screens and other things, maybe do technical analysis, fundamental analysis, but this is another way of looking at things. So with that in mind, I very much appreciate your time. Again, these videos are for private use, so, but if you think of someone that you're close, if you think these are informative, please go ahead and share the YouTube. And if you think they'd like to be part of our group, please invite them. They're more than welcome to join us. You're like my board of directors, so you will always be dear to me. So, but with that in mind, Sean, I think I know you have to leave, so you can stop the, the recording and open the forum for the questioning. So
Sure, thank you.
great. So hopefully